Okay, so today we're taking a deep dive into AI investing, and I think it's safe to say AI is kind of everywhere you look right now, right? Headlines, new companies, stocks going through the roof. It's a lot to wrap your head around.
It definitely feels like we're at a turning point, and yeah, that can be overwhelming. Almost like that dot-com boom back in the late 90s. You remember that?
Oh, absolutely. .com slapped onto a company's name, and suddenly they were worth billions.
Exactly.
Mhm.
And just like back then, it's more important than ever to like separate the hype from what's real. A good place to start is by looking at how the market values these companies. Back in 2000, at the peak of the dot-com craze, the biggest tech companies were trading at a forward price-to-earnings ratio. You know what I mean? That PE ratio was at 59.
Okay, for those of us who don't have MBAs, could you break down what that 59 actually means for, like, how investors were behaving?
Sure. So basically, investors were willing to pay $59 for every $1 of future projected earnings for those companies. They were all about potential, maybe not so much actual performance. Now, fast forward to today and look at AI leaders like NVIDIA or Microsoft. Their forward PE ratio is around 34, so less than half of that dot-com peak.
Wow, that is a pretty big difference. So does that mean we're not in a bubble?
It's not quite as simple as that, but it definitely tells us something important. Analyst predictions for earnings growth of today's AI leaders are actually higher than they were for those dot-com giants back then. Now, that doesn't mean AI stocks can't be volatile, because they absolutely can be, but it does suggest that there's more concrete potential this time around.
So maybe not a bubble ready to burst, but definitely a roller coaster we want to ride carefully. Now, we can't talk about AI investing without looking past the big players, right?
You got it. And that's where it gets really interesting, because you have to look at the whole AI landscape. It's helpful to think of it like AI 1.0 and AI 2.0.
Okay, I'm intrigued. AI 1.0 versus 2.0. What's the difference?
So picture this. AI 1.0 is like the foundation, the infrastructure, data centers, cloud computing, the muscle behind it all. And then you have companies like NVIDIA making those crazy powerful GPUs that make AI even possible.
Right, the picks and shovels of a gold
You
rush.
got it. Now, AI 2.0 is where it gets really cool. This is all about the software, the applications, the companies that are actually using AI to like change their businesses, even change entire industries. Think AI customer service, personalized medicine, how we manage our money. It's huge.
So if AI 1.0 is building the highway, AI 2.0 is all those futuristic self-driving cars on it.
Exactly. And while those highway builders are essential, it's those companies building the self-driving cars, the AI-powered logistics solutions, those are the ones that can unlock the really mind-blowing stuff.
That makes sense. I was reading about Klarna, the buy now, pay later company.
Hmm.
They're already using AI for a ton of their customer service.
Yeah.
Like they're doing the work of something like 700 full-time agents with AI in just 1 month.
That's AI 2.0 in action, not just talking about it, but actually using it to make a real difference right now. So when you're thinking long-term AI investing, you got to look beyond the chip makers and the cloud guys.
Got it. A balanced approach. It seems like most of what we hear about AI centers around Silicon Valley. What about the rest of the world? AI is a global thing now, right?
100%. It would be a big mistake to only focus on U.S. companies. The U.S. is a big player for sure, but the AI race is just getting started.
I was just reading that Baidu, the Chinese tech company, has a chatbot that already has over 100 million users. That's direct competition for ChatGPT, isn't it?
Absolutely. And it highlights how much China is pouring into AI. We're also seeing really interesting things in India with all their tech talent and how fast their digital economy is growing. And don't count out Europe either with all their experience in robotics and industrial automation. AI investing is a global opportunity that's only getting bigger.
So much to consider, and we haven't even gotten to specific AI stocks yet.
Don't worry, we'll get there. But first, we have to zoom out even more because it's not just about the companies. Governments are playing a bigger and bigger role in the AI landscape too.
Okay, how so? Are governments getting into the AI game now?
Kind of. They're starting to realize how important AI is strategically for economic competition and even national security. We're seeing more government money going into AI research and a lot more focus on developing ethical guidelines and regulations.
So that means new opportunities for investment, but maybe some new risks too.
Exactly. Government regulation can be a good and bad thing. They can create stability for AI companies, but if they're too strict, it can stifle innovation. Investors really need to pay attention to how governments approach AI regulation because it could have a huge impact on how the whole industry plays out.
This is already so much to process, and it feels like we're just scratching the surface. It's pretty wild to think about governments getting in on the AI action. But let's get down to what I know a lot of our listeners are here for. Specific AI stocks. Where should they be putting their money?
Of course. And when you think AI stocks, I bet NVIDIA is the first thing that pops into your head.
For sure.
Their GPUs are basically the engines driving this whole AI explosion. Their growth has been insane, like over 170% just this past year.
That's
It
nuts.
is. And then there are the other big names we all know, Microsoft with their piece of OpenAI and those Azure cloud services, and Alphabet using AI for, well, pretty much everything Google, and Meta going all in on building their own AI models like Llama.
And we can't forget Apple. They're always so quiet about what they're working on, but those new AI features on the iPhone 16 are definitely getting people talking.
Absolutely. Apple is definitely one to watch. They're masters at making new tech user-friendly and weaving it right into their products. But here's the interesting thing. You don't have to be building chips to be a winning AI stock.
Right.
Take Palantir, for
Oh,
example.
yeah. Palantir has definitely been on my radar. Their data analytics software seems to be everywhere I turn these days.
Exactly. They've got their fingers in everything from intelligence agencies to healthcare. And their stock is through the roof because they're not just talking about AI, they're actually producing results. It's that show me moment we were talking about earlier.
Like that old saying, show me the money. Speaking of money, a lot of these software companies seem to be struggling to actually turn a profit from their AI products. Should investors be worried about that?
That's a really good point. We're at a stage where companies can't just say they're AI powered anymore. Investors want to see how AI translates into actual revenue growth, not just bells and whistles.
Right. It's easy to build a fancy AI chatbot, but it's a whole different story getting businesses to pay for it.
Exactly. And for investors who are maybe newer to AI and want to spread their risk a bit, AI ETFs are a great option.
Oh, yeah, ETFs. Can you tell us a bit more about those?
Sure. AI ETFs are a way to invest in a bunch of different AI-related companies all at once, so you're not putting all your eggs in one basket. Some of the popular ones are BOTZ, which focuses on global robotics and automation companies, ARKQ, which invests in companies doing really innovative stuff, and Robo, which tracks a global index of companies all about robotics, automation, and AI.
So basically, AI ETFs are a way to dip your toes into the AI investing pool without going all in on one company. But how do you even know which ETF is the right one to choose?
That's where you got to do your research. Look at their expense ratios because those can really eat into your returns over time. Check out their track record, how have they performed in the past. And of course, look at what specific companies are actually in the ETF's portfolio. Make sure it matches up with your risk tolerance and what you're hoping to achieve with your investments.
Don't just follow the hype, right? Do your homework. Now, for our listeners who are maybe feeling a bit more adventurous, we have to talk about AI startups. That's where the potential for those massive returns are hiding, right? But also the risk.
You could say that. The AI startup scene is exciting. It's super dynamic, tons of potential, but also a lot of uncertainty. It's like the Wild West of investing, high risk, potentially high reward.
So how do you separate the potential winners from the companies that are probably going to flop?
It's all about seeing through the fancy presentations and buzzwords. A big red flag is when a startup can't clearly explain how they're going to make money from their AI. If they don't have a solid business model, that's a problem. And you want to look at the team behind the startup too. Do they have a good track record with AI? Do they have the right mix of technical know-how and business smarts to actually make their vision a reality?
So just like any investment, you're checking for signs that this is a sustainable business, not just a cool idea.
Exactly. And that takes careful research, doing your due diligence, and let's be honest, a little bit of luck never hurts.
What about for listeners who are intrigued by AI startups but maybe aren't ready to become angel investors themselves? Are there platforms where they can explore these early stage opportunities?
Oh, absolutely. Platforms like Linqto are all about pre-IPO tech investments. They give you a way to get involved with startups that aren't publicly traded yet. It's like a chance to get in on the ground floor of something big.
So huge potential upside, but those show me moments still apply, right? Even with startups, they ultimately have to prove their AI can deliver.
You got it. Investing fundamentals don't change even in the fast-paced world of AI.
This has been such an insightful conversation. We've covered so much, from the dot-com bubble to AI-powered customer service, from the global AI race to the ins and outs of evaluating AI startups. But I think it's important to zoom out for a second and talk about the bigger picture. We've talked about how AI has the potential to completely change the game for so many industries. But at the end of the day, a lot of our listeners are probably thinking one thing: show me the money, right?
Absolutely. Investors are always excited to ride the wave of a hot new technology, but the bottom line matters.
For sure. And we keep coming back to this idea of a show me moment for AI. What does that actually look like for investors? How do you know if a company's walking the walk and not just talking a big game?
You want to see cold, hard evidence that their AI is bringing in revenue. It's not enough for a company to just say, hey, we use AI. Investors want to see a clear path to profitability, a straight line from the tech to the money it's making.
So it's about cutting through the hype and looking at the financials, the actual numbers, to see if AI is really driving business success.
Exactly. And that goes for everyone, the big players and those exciting but often risky AI startups.
Speaking of startups, let's look back to something we talked about earlier. AI 1.0 versus AI 2.0, the infrastructure versus the applications. If we're really entering this show me phase for AI, what does that mean for companies in those two different categories?
That's a great question. For those AI 1.0 companies, the ones providing the hardware and cloud computing power, their show me moment might be a bit more straightforward. Are they seeing more and more demand for their stuff from those companies that are building and using AI applications? Are their revenues reflecting this huge surge in AI adoption we keep hearing about?
So for companies like NVIDIA, it's not just about their own growth, it's about the growth of the whole AI ecosystem they're powering.
Exactly. Now, for those AI 2.0 companies, the ones creating the actual AI applications, it gets a little trickier. They have to show that they can actually make money from their AI. Can they convert users into paying customers? Are their AI solutions something that customers see enough value in to keep using, to keep paying for?
It's one thing to have a million users, but it's a whole other ball game to have a million paying customer.
You got it. And here's where things get really interesting. We're seeing a shift in the AI market right now from focusing on training AI models to inferencing.
Okay, hold on. Inferencing. I think that's a new one for a lot of our listeners. Can you break that down for us?
Sure. Think of training an AI model like teaching it how to do something, like recognizing images or translating languages. It takes a massive amount of data and computing power. Inferencing is then using that trained model to actually do stuff, to generate results, to actually be useful.
So if training is like giving the AI an education, inferencing is putting that education to work in the real world.
Exactly. And for AI 2.0 companies, that inferencing stage is where the rubber meets the road when it comes to making money. That's when they have to prove their AI can deliver real value, not just in theory, but actually out there in the real world. That's the show me moment for AI 2.0.
So if you're an investor looking at AI 2.0 companies, it's not just about can they build a really cool AI, it's about can they build a cool AI that people will actually pay for.
You nailed it. And that often means really understanding a specific market or industry. The companies that can bridge that gap between this cutting edge tech and real world problems, those are the ones that are going to do really well in this show me phase and beyond.
This deep dive has been amazing. We've covered so much ground, from the dot-com bubble to AI doing customer service, from the global race for AI dominance to the nitty-gritty details of AI inferencing. We've talked about specific companies, ETFs, and even how to figure out if an AI startup is worth your time.
It's a lot to take in, but here's the bottom line. AI is at a crucial point right now. The hype is real, the potential is huge, but companies have to show us what they've got.
It's time for those show me moments. For investors, that means doing your research, thinking critically, and remembering that even in the exciting world of AI, just like with any investment, there's no shortcut for understanding the fundamentals.
Well said.
And on that note, it's time to wrap up this deep dive into AI investing. This is just the beginning of the conversation, though. We encourage you to learn more on your own, and as always, invest responsibly. We'll see you next time.